Good morning, everybody. Let me go ahead and get this shared really quick. Okay, good morning. Sorry, I had to get that shared out. Give me just a second and we will kind of get into everything. Um, I am looking at the data sets today, and the data did come in pretty hot. Okay, so we had the CPI today. We also had the ADP employment change weekly. That came in cool. But CPI pretty much across the board came in slightly hotter, um, even above the forecast. So it was quite a jump across the board. So that's going to be hawkish for the market, um, which means that it's going to be bearish. Basically, it's going to be leaning against the equities. Let me get this shared out really quick. Okay, sorry, I had to get everything shared out. Okay, good morning, good morning. Let's get into this. Okay, so we've been having a bit of a sell-off since yesterday. Obviously, we did not get our upper Bollinger move. In fact, we had our fourth upper Bollinger rejection. Okay. Now, I do want to delete a bunch of these drawings here. Just give me a second. Go to the 1 hour. Now, the first thing we're going to do today, before we even start worrying about positions or anything, is we're going to work on identifying all the structure in the chart right now. And to do that, we're going to start with the daily time frame. Okay. Now, the 5 month on our end, since the open hasn't happened yet, is currently at 733.22. That will be pulling up to about 734.30-ish, give or take. So let's go ahead and mark that down. It might be a little higher. So let's just do a horizontal ray and change this to green and ensure our level is at that 734. It's 734.60. Okay, so that's going to be our 5 mile, which means that the market's pretty much right on it. So the likelihood is that we would be heading downward to test that level. Let me go ahead and turn off the moving averages here. But on top of this, we have fairly strong bearish structure here. Very likely today will be that formation of the right shoulder pull down. And if they really want to kick off the selling, then we have liquidity that needs to be broken pretty much right above where the 5 mile range is. Now, this is important because I do want to identify that within the 5 mile itself, there's also two other ranges that are very key, which is the upper bounds of the 5 mile. And this will kind of put this whole trading session into perspective here. But one moment. So we're going to mark the upper bounds with that, the lower bounds with that. Just give me 1 second. It's really small. Hold on. And today, by the way, will be a stream where we will be going over quite a bit of questions. So if you do have questions today, feel free to ask, because that's a large portion of what today's stream will be about. Let's not put that through the center. Let's put that. Okay. So what this is telling us is that basically the market's already within the bounds of the 5 mile. Um, well, very close. The pre-market is currently at 737.02. So are we very likely to see a 5 mile test occur today? I would say it's extremely likely. The upper Bollinger today will probably still be around that 740, might be around that 742. So we'll mark that. Okay. So that should be really giving us a good understanding of kind of where the day is. We have this bearish structure built on top of where we have the 5 mile sitting, which is telling us very likely we should be seeing a 5 mile test. Now, will we see this entire liquidity taken? I'm not so sure about that yet. That's quite a bit of room downward still, even on today. Um, I think, if anything, the market is still very close to this upper Bollinger, and overall, it still has been trying to reach that level. Now, there is a very key level between the daily upper Bollinger and the daily 5 mile, and I won't keep this highlighted the entire time, but I do kind of want you all to take a screenshot of this in a second. But this happens to be one of the most bearish ranges you can ever have, and I'm going to show you an exact example in just a second, because we do have a few minutes. We have plenty of time to go over positions, so don't stress about that yet. I always call this no man's land. Okay. Now, the reason why we call this no man's land is because whenever there's the most massive sell-offs, it's always due to this. It's when the market tries to reach for that upper Bollinger, rejects, reaches for the upper Bollinger, rejects, reaches for the upper Bollinger, rejects, and then eventually that rejection turns into a full-blown sell-off. Okay. Now, I'm going to show a few ranges where this happened. So we'll just take the one that we have over here. So this happened before the Iran war. Okay, we had multiple upper Bollinger rejections in here between the 5 mile and the upper Bollinger. We could not secure the upper Bollinger, even though the market over here was looking okay. It was looking not terrible, but not like a full sell-off was getting ready to brew either. But the lack of that being able to claim that upper Bollinger basically created the conditions to where we can have that massive sell-off. Okay. Now, another example of this was before the major sell-off in 2025, in early 2025. So when we were leading up to this point, the market here was looking, pretty bullish to me at that time. We had this cup forming, looking like the handle, and from that handle, we were expecting an upward breakout, but we actually had a full-blown rejection to the downside. We did catch that, but it was still not easy because the market did look very bullish before that. Um, so this no man's land, okay, my Weeble just crashed. Hold on. 1 second, everybody. Okay. Can you see that again? Okay. Thank you, Weeble. Anyway, so these no man's lands basically create these conditions where we have some of the largest market sell-offs. Um, we were also experiencing that a little bit in this range prior to the 2024 sell-off we had in August. So it's something that myself and a few of the other experienced traders in the group really, really, really look for. Um, it becomes an extremely dangerous zone, and if we continue rejecting this upper Bollinger, then that's telling us that this range is no good. We're going to sell off from it. Buyers are no longer interested up here. Okay. So what today should be looking like is pulling down to the lower Bollinger. Or not the lower Bollinger, but excuse me, the lower bounds of the 5 mile, which again, that's going to be around that 732. Okay. We do have bearish structure here, so the whole goal of today will be to find the short position. Now, again, we are waiting for the upper Bollinger on the 5 minute time frame. So we will just highlight this. Market's going to open up in a few seconds here. I am not going to be selling any of my dated calls for this Friday just yet. I want to see what happens with this 5 mile test because from this 5 mile test, we can have a very major upward bounce to the upper Bollinger, or we're going to start targeting some of our lower support. Okay, like the 10 mile, the 20 mile, which we talked about that over the last few sessions, that the 20 mile has not been tested in, I believe, 35, 36 sessions now. So we are very due for a quality 20 mile test to occur. So today we are looking purely for a short position to retest this 5 mile here. Now let's make sure our 5 mile is actually at that level. So it's actually quite a bit above that. It's at the 735.80. So that actually means that we are currently testing that level. So I want to adjust this. And I will get to the questions in chat in just a second. I just want to make sure that we're setting up the day very properly here. And the lower bounds will be coming up. Let's just put that to 480. Okay. So this is actually a good thing. Um, in terms of being bullish or bearish, because this is telling us that I messed that up. Go to 3. This needs to go to 7, not 8. Sorry, everybody, I'm being stupid right now. Just 1 second. Okay, there we go. So we're already within the test of this 5 mile range. Okay, so we're already doing the 5 mile test. This is very good. This means that if we see the bounce from here, we should be fully expecting to head upward towards the upper Bollinger. But if we don't see the bounce, then of course we're going to be 5 mile testing into a right shoulder on this head and shoulders here, which I know I drew, but it's deciding not to show. So again, we're being very cautious of this head and shoulders at this 5 mile test. Now there was a little bit of a put entry here. I did not take that put entry. Um, no, that wasn't a put entry. That was during the pre-market. That doesn't count. So what I'm looking for here is this inverse cup to close. Okay, from that inverse cup, we should be working on a handle to the upside prior to fully testing our downside here on the 5 mile. So we'll look to see if that structure closes. Okay. If it doesn't close, then potentially we could be working on some bullish structure just for the short term. And from that bullish structure, pulling upward towards the upper bounds of the 5 mile, and then we would still be looking for that short position because when we want or when we have the 5 mile being tested, we fully want the upper bounds and the lower bounds being tested. Okay, we want this entire level to truly be tested. Um, for me, it would not be bullish just to see this very quick tap of the 5 mile and then heading upward. Now, in terms of everything else, let's just check our VVIX. So our VVIX, super, super elevated. It's within that red zone. Yesterday, we did not see it get defeated like I expected it to. It started pulling into the yellow zone pretty much right after I ended stream. It started heading all the way back up again. Um, so VVIX, very, very elevated. Okay, that's telling us that obviously there is some selling going on in the market right now. Now, I want to look at liquid and HIG because that will be very, very important. So HIG, you can see this very, very well constructed head and shoulders here. But we're basically at the bottom of it. You know, we've actually completely taken that liquidity. So if the market wants to bounce out of this 5 mile range, technically this is giving us a little bit of a area to bounce from. Um, Now there's still a little bit further down liquidity, so let's go ahead and just mark that to see if they will try to take that. Now, with this cup to the upside, we can delete that as that has been fully invalidated. Well, it hasn't been fully invalidated yet. We do need to pull down to basically this 79.57 to fully invalidate that cup, but currently this is looking pretty bad. Um, we should be seeing this further gap take into the downside. Now let's go back to SPY. Okay, so there's that inverse cup to the downside closing that we talked about. So we should be expecting push to the downside to fully test this lower bounds. So the position here, again, we need to be very patient, but we need to wait for this to pull back up again and create a handle before heading downward. So that's where we're going to be entering our puts. So I'm going to mark this out, and I'm going to be going over chat in a couple seconds here. I do apologize. Just this morning has been very, very busy. Okay, so we're going to leave that there. Okay, all right. So let me go turn off my heater because my room is probably like 80 degrees right now. Give me 1 second and I will be right back and we'll go over some questions and everything. Okay, so 5 minute time frame, we should be hitting the bottom of this cup, which is right at that 735.38. So that should be hitting any time now. And this actually is going to create a little bit of a call opportunity to the upside. Um, Not that today's the type of day I would want to enter calls, but that opportunity will be available once we hit the bottom of this cup. So we will be looking for that. I'm just setting up some orders really quick. Okay, and again, I am keeping a lot of my weekly calls for the end of this week because once we test this 5 mile, there's a very, very large potential that we see the bounce to the upside. Even though we did have hawkish data this morning, we did have, you know, we do have bearishness within the market currently. Now, I do want to go over a couple other symbols because it will be very important as well. Okay, so semiconductors has a really, really large gap at that basically 515. Okay. Um, we saw it pull down to 516.34, so it actually did not fully hit that gap yet. Um, I do fully expect that gap to be hit. I With that said, with us fully expecting that gap, this creates a really quality short position on semiconductors. So I want to look at taking, hold on, what's SOXS at? There's actually going to be room in the $9 SOXS calls. Okay, we will be taking that at the top of this. Okay, so we want the upper Bollinger to be pushed here. Upper Bollinger is at the 523.40. Okay, so allow for that to happen. There is a cup formed here. So allow for that to occur. Okay. Um, but we will be taking the SOXS 9 calls into this. So I'm going to write that here. And we will be using these as a day trade slash holding through the week. Because if we're going to be having further bearishness within this week, then these calls are going to be paying out immensely. So I want, well, I can't say that. I can't say that on stream. I'm going to be setting up these positions. I can't exactly suggest them to you, but I do think they're going to be very quality. Okay. So I'm not buying into it yet. I want to be very, very, very patient and wait for this cup to fully close. I want to see some bearish structure forming at the top of this cup, and then we can really safely take those positions. Now remember, SOX S is the bear ETF. So this is basically taking a semi-short position. Okay. And again, we're still going to be holding all of our other tech calls, okay, for Friday because we're not entirely sure of this downside. Okay, here's our level. So go ahead and get some of those put in. I put in mine for 0.39. Let's see if we get filled. No. Okay, yes, we got it filled for 0.39 per. And the great thing about this is that if they decide to bounce the market to the upside, we still have all of our other tech calls. So this just becomes a very quality hedge to that, if that's the case. So let's go back to SPY here. Let's see what's going on with the SPY. SPY is currently at the 736.44. So did not fully complete this cup to the downside yet. So I'm fully expecting this right shoulder. We also have this smaller head and shoulders that I want to identify here too. So it's extremely likely we form this right shoulder, which would also create the handle to this inverse cup. Um, I do fully expect us to close this gap to the downside though. Uh, we still have not done that yet, so that does need to be completed. And I want to look at QQQ. QQQ is also giving the short position here. So um, there's quite a lot of room within those puts currently. You can take the 708 puts. Even the 707 would work, but personally, I'm gonna be looking at those 708 puts um to the downside. Okay, and we would be taking that to the 20 mile, so the 707.82. Um, However, again, with the downside on today, these could potentially run quite a bit harder. Now, I want to look at HIG because HIG is at that range where it could have a very, very massive bounce, or it can continue down and take out this whole liquidity range. Okay, so we need to watch that very closely. And the VVIX should still be super elevated. Yep, 102.19. Okay, so I just want to look at semis really quick, and then I want to go over some questions. Yeah, these are looking great so far. Okay. Um, Now, if the market's going to turn bullish, which I really, really don't think it's going to yet, um, then we would see this bounce off the 20 mile here to create this cup and handle to the upside, okay? Um, Again, I'm not expecting that, but that does mean that the exit on these success calls would be at that 20 mile, which again is at the 121.06 currently. We'll just put that up to about the 120.20 or 121.20 just to show that slight upside. So that will be potential exit. I'll just write that. I really try to just write everything on this for everybody because hopefully they help. For me, it's always nice to have these little notes while we're trading, um, because there's a lot going on while we're trading, and it's easy to forget things, even though it might seem super apparent. So it's always good to mark things out. We have the SPY retesting the 20 mile here. I am expecting a full rejection downward to the 735.38. We still have to clear that gap, okay, to fully complete this inverse cup. So it's extremely likely that we have that rejection downward, fill that cup to the downside. Okay, so I am expecting that our VVIX is picking up quite a bit. SPY starting to pull down. So look for the bottom of this cup to be completed. Okay. From this cup bottom on SPY, there will be room on calls, but I'm not going to be taking those on a day like today. Um, we already have enough calls, and we just need to be targeting and playing the downside here. So we're looking for again the 735.38 to fully complete here. Should happen any second now. So perfect. And I want to look at semiconductors. Semiconductors are pulling down, so I want to see how our SOXS calls are doing. Our SOXS 9 calls are up about 11%. Okay, so not super, super high, but technically that is an exit if someone wants to take it. I'm not going to be taking this exit here. I'm going to be holding, as again, either we're going to be having a pretty large market bounce out of this 5 mile range, or we'll be continuing downward, um, you know, quite a bit today. So I don't want to cut these success calls too early. This downward gap on SPY still hasn't been fully completed, so we're looking for that. Sorry, I'm just looking at some things on the brokerage really quick. And I need to plug my phone in. Just give me 1 second. I'm just reading some things, everybody. Okay, so after we do hit the bottom of this inverse cup, I do want to go over how to kind of identify trends, um, because that's a question Anna has, and I think that's, something that's very good to work on identifying. So after we hit the bottom of this cup and we make sure that everything's kind of going the way we expect it to go, um, we will be taking a look over some other symbols and identifying some long trends. So And if there's any symbols specifically you want to take a look at, um, let me know. Personally in the stream chat, that's fine. You can exit it at that 735.38, because again, once we hit that level, we are expecting bullish structure because we need the liquidity to pull upward for us to go back downward. Okay. So if you already have that short position, I would heavily suggest um taking that exit at the bottom of the cup, which is coming very soon, but wait for that full level. Okay, so literally wait for the 30 something cents to hit. But that would be a very primed exit. If you don't exit it at the bottom of this cup here, um, then you have a very high likelihood of seeing that contract getting burnt for you know, a very large chunk of the day. So make sure you exit at the 735.38. Okay. Wait for the 38 to hit. Um, this is not an exit until that hits. Okay. We only got to the 42. That does not count as a full cup completing. Now, semiconductors still rejecting to the downside so far, so potentially this could be, not giving us this cup and handle, but rather a head and shoulders, which is perfect for our calls, which means that, I mean, I I say calls, but technically they're puts, but our success calls, um, that means we hit a perfect entry on. Okay. Uh, so that's looking super good so far. Now, I do want to look at the VVIX 102.53. It's still insanely elevated today. So unless we start seeing this pulling down massively, then today will be a pretty bearish day. The HIG is still working on that downside liquidity as well. Okay, so your level hit. So, or no, excuse me. I thought this was saying 735, excuse me. Let the 735 hit. Okay, you do need to let this fully hit. Now, you have a smaller inverse cup here that did close. So from that smaller inverse cup, look for the further cup downward. That will close the full cup to that 735. Very likely even giving you that 734. Okay, so look for that exit. You really want to wait for the bottom of that cup to hit. Okay, let me see. Oh, did you hit that exit when it that's fine. That's a fine exit. Um yeah, that's a great exit. Perfect. Okay, so that makes me feel good that you exited. Now I don't have to worry about that. So, um very good work. That should have been a great put position for you. Now, with that said, let's go ahead and just look at something like, I don't know, let's look at Micron. I think everyone has a pretty large interest in Micron. So we're going to go over trends here. So I didn't want to delete that. No, I wanted to delete this arrow. Over the 4-hour chart really quick just so that I can properly get this fixed. Okay, so that was just identifying that opening move. Okay, so we're gonna go over long trends here, everybody. Since our SPY level pretty much did hit, we're now just waiting for that handle to the upside, which we will be keeping track of, okay? Um, the upside today will be again around that 736.73. So I just want to mark that with horizontal ray. So again, if I'm missing that while I'm talking, someone in chat, make sure you remind me. So someone needs to be watching SPY at least for us. But I want to go over long trends, okay? And let's really zoom in here. Now, with long trends, we use two different things to really identify where the prices are going in, and that's our Bollinger Bands and that's our moving averages. Now, for the moving averages, the ones that I specifically use are they're called you know, the SMAs. On Weeble, it'll just be called the MA. I don't use the exponential moving averages or anything else. I think those are more so for day trading slash scalping, as those will give you different levels than what I'm looking for. The reason why I use the SMAs or the standard MA is because that is what pretty much every system has been built on. Um, these were created back in the 1800s, and they were primarily used by the Bank of England to hide data from the public. They'd be able to see the moving averages and be able to see a more clear understanding of where the price is going or where that data set was going rather than just um, you know, yeah, not having it. So that's what the Bank of England created these for. Um, then pretty much every single indicator from those have been built on the standard moving averages. So these are most ancient trading systems we have. Um, they were also used primarily by Charles Dow, which he's the creator of the Dow. So very important tool. But we use the 5 mile, which that's tracking 5 iterations of whatever time frame we are on. So doesn't matter if we're on the 1 minute time frame. The 5 mile here will just be showing 5 candles, so basically 5 minutes worth um, of price action. But on the daily time frame, this is telling us that this is roughly the week's worth of price action. Okay, with the 5 mile. So 5 mile is the 1 week, 10 mile is the 2 week, 20 mile is about the 1 month test. So generally that test is going to happen every 20 trading days. Usually every month has about 20 trading sessions within it, give or take. So that's usually a level tested once a month. Okay. We have the 50 mile, which that's more of like the quarterly test. Um, Usually you're going to have about those 50 to 70 trading days within the quarter. So that's the, kind of quarterly test. And then we have the 200 mile, which is basically the yearly test. Um, there's a little bit more than 200 trading sessions in a year. I think it's like 220 something. Um, However, this is basically tested once a year. Okay. The moving averages are basically like clocks. And I actually just want to write that here. So, what I say by clocks and magnets is that these levels are gravitated towards. Okay. And I just want to delete this drawing. right there because that's not important. And I just want to really dig into some of this. So when we had Micron back at 192, okay, we see that it's above the 50-day moving average, which means that this is bullish territory for the quarter. Okay, I wish I had a better way to write notes on here. But we can see that all within this range, we are above the 50 mile, which again is this yellow line. So I know it's kind of hard to see on my screen because there's just a lot going on, but we'll turn off the Bollingers here just to show the moving averages actually. But we see how the price action is well above that 50 mile. So that's telling us that this is holding buying for the quarter. Now we did see it pulled down towards the 50 mile, and potentially that was showing a trend change. Okay, so before we see all this upside, kind of just scooting the chart back over to here, then this looks like, okay, potentially we could be forming some bearish structure. Potentially we have this left shoulder here. Potentially we have this head forming. We have our moving averages starting to cross down. So we see that the 5 mile is crossing below the 10 mile. It's really hard to zoom in on this. But we see the 5 mile is crossing below the 10 mile. We see that the 10 mile is starting to cross below that 20 mile. So those are trends that are saying that the week's worth of buying is getting weaker, the 2 weeks worth of buying is getting weaker, and the 1 month worth of buying is getting weaker. And then we see it pull below the 50-day moving average, which tells us that, okay, potentially this could be starting to become very bearish. Now, what happens? Obviously, it rejects that. Okay, so once that's rejected, we can delete that head and shoulders a little bit. But the big signal here that is rejecting is this 5 mile. You see how the 5 mile here starts pulling back upward instead of heading underneath this 50 mile? So if the 5 mile traveled underneath the 50 mile here, that would show us some extreme bearishness because that's showing that our weekly price isn't even supporting the quarterly price. Okay, so that would have shown major bearishness. However, that did not occur. We see the 5 mile starting to pull back up, and what happens? It pulls up over the 10 mile, which is telling you the week's worth of buying price action is now beating the 2 weeks worth of buying or buying or selling price action. So this is bullish. This is starting to become bullish, even though the trend's not bullish yet. And I will show why. And that's because of that 20 mile. So even with some of this smaller bullishness in here, we're still below the 20 mile. Okay. We see the 5 mile cross over the 10 mile. Well, what can happen after that? Well, very likely, if we're going to continue heading upward, then we're going to see the 5 mile cross over the 20 mile. And what's that telling us? That the 5 mile is crossing or the weekly levels crossing the monthly level. So we're seeing more buying over this week level compared to the whole month level. So this is becoming bullish, okay? We see the 5 mile cross above the 20 mile. Now what needs to happen next? We need that 2 week level to start crossing above that 20 mile because that's going to be telling us that not only is the weekly buying price action supporting this move, but the 2 week buying price action is supporting this move as well. And we can fully pull above this 20 mile, and now we're fully bullish. Okay. Once we see the 5 mile, thank you. Thank you, thank you. But once we see the 5 mile fully above the 10 mile, 10 mile fully above the 20 mile, what's that tell us? We're fully bullish now. Okay. We also have these levels still sitting above our 50 mile, so there's nothing above us in terms of preventing us from heading upward at this point. Our moving averages are telling us that the weekly buying is being heavily supported above the 2 week buying price and much heavily supported above the monthly buying price. Okay. But then we see that trend shift again, just a little bit in here. Not too much, but it's a little bit. So we see the 5 mile start coming back down. It crosses over the 10 mile, still heading back under, crosses under the 20 mile. So that's saying that our weekly buying action is now weaker than the 2 week and the monthly. Okay. But then we start seeing the 5 mile pulling back upward. So a little bit of consolidation in here. And what consolidation means is that everything is tightening. So you're seeing a lot of tightening in this range where the moving averages really aren't expanding here. They're consolidating. You're seeing it go from bullish to short-term bearish to short-term bullish to short-term bearish, short-term bullish again. Then we finally cross under that 50 mile. From underneath that 50 mile, that's saying that the price, the buying in here is not supporting the quarterly expectation of buying. So this was starting to get very bearish. We had our 5 mile underneath this level. We had our 10 mile underneath this level. We actually saw the 20 mile pulling underneath this level for a very short period of time as well. And reason why well, let me step back. Then this started pulling back upward. We see the 5 mile pulling up above the 10 mile, still continuing above that 10 mile. 5 mile crosses over the 20 mile. So we see that the buying starts to pick up again. And within the short-term moving averages, which that's the 5 mile, 10 mile, and 20 mile, we see that this was bearish, but all of a sudden it starts becoming bullish in here again. We see 5 mile cross 20 mile, 10 mile cross the 20 mile, which means that the 5 mile is above the 10 mile, 10 mile above the 20 mile. Short-term bullish. It then crosses over the 50 mile, which tells us that okay, we're buying again. Okay, we see the 5 mile holding above that 10 mile, holding above that 10 mile, holding above that 10 mile, doing very well, and suddenly all we're at 700. Okay, so that's how you use the moving averages. Now, the level that we didn't get to talk about is this 200-day moving average, which we did see this tested. This is probably back in early 2025. Yeah, early 2025 when we did have that sell-off. Um, we saw that pretty much the entire market hold underneath their 200-day moving average, which is showing that there's more selling in this current moment than the buying and everything else within the price action over the last year. Okay. Um, that's a very bearish range, but it's also a range that usually doesn't last very long. And this is kind of where we get into our Bollinger Bands. But I do want to check the market really quick before we fully get into that. Okay, great. So we see our downside on QQQ here. I want to turn on Bollingers for a second. Downside on QQQ hit. If you all did take those puts, I took the 708. Probably should be exiting it fairly soon here. I am looking again for the 705.16 to fully exit, but um, potentially I might have lost a little bit of money by going over things, which that's fine. I don't really care. Um, Semiconductors as well. We see the rejection of this cup and handle, which that's something we talked about. We talked about how this can start forming into a head and shoulders. We still are looking for this right shoulder to build, so there's still potentially plenty of room to the downside. And we see how semiconductors hit that gap literally to the penny. So funny to see. Um, okay, but it hit that gap literally to the penny, which means that we do have room to be pulling up here to continue heading downward. Okay. So for the success calls, hold on, I need to look at my phone for a second, look at my brokerage. Okay, so our success calls are doing good. They're up a whole 36%. Again, I'm still holding all of my tech calls because we can be bouncing out of this today. So just being very, very neutral overall in terms of holding these, um, basically semiconductor shorts. Okay, so from here we should be expecting the pull upward. Look for the 20 mile here at least, but what I am expecting is the upper Bollinger to pull downward and for the upper Bollinger to be the entry. Deleting that exit because we don't need it. But very likely the upper Bollinger will pull down, give us our right shoulder entry into a further downside. So there will be room again to enter some of these success calls. Excuse me, if you haven't had the opportunity to do so yet. Let me go ahead and look at SPY as well. SPY working on building that bullish structure from the bottom of this cup. So that's exactly what we've been expecting. This should give us the liquidity to build that handle to the upside and also this right shoulder. So again, our put entry today on the SPY we're really looking for is up here. Um, Up here meaning up at the roughly 736.54. I have it marked at the 736.72. So we'll just go ahead and pull that down a little bit. Now we're starting to get fairly close to the put entry. Um, so just be aware of that. I do expect a little bit more chop in here. No, we're not going to be going for calls just yet. We do need to see the 5 mile level fully tested. Um, Currently we're sitting basically right at the center of this 5 mile range. But what I do expect out of that is I expect put this in white. I expect the lower bounds to be tested just as well as the upper bounds. Um, with us seeing some of this bearish structure within the upper bounds, that's telling me that very, very likely the market's trying to build the liquidity to head to that lower bounds. From the lower bounds of the 5 mile, that's where we will be taking some calls. Okay. That will be a very opportune call taking time. But we do want to ensure we get some puts to actually head down to that range. So um again we are looking for this 5 minute time frame to give us the 20 mile. Excuse me. From that 20 mile, we will take some puts, and those puts we will be taking will be the 734s. Um, so yeah, is everybody on the same page for that right now? Yes, the Discord is going back free. I have to change a couple things on it before I could do that, but yes, the Discord is going back free, and everything within that $1 subscription is going to be included with that free membership. So, um, the Gex, the Dex, the unusual whales, all of that will still be included, all except free. Um, but I do have to set a few things up first prior before I can really fully change that. So could still be a few weeks out. Um, I want to go back into the long trend discussion here after we get our puts set up. So we are again looking for the 736.51. So I will be targeting some sorry, I can't talk today. I'm super exhausted. I've had a very long night. We will be targeting the 734 puts. Okay. Just give me 1 second because I want to set up a couple orders. Okay, so be very patient for our level here. We do want to wait for again this 20 mall, but I am prepared to buy these puts. I got my hand pretty much on the trigger, so I'm just waiting for this to happen. Um, but after we enter our puts here, I will be going over again the long trend on Micron. But I want to show what happens with the moving averages when you add those Bollinger Bands into the mix. And Anna, if, hopefully you're listening, but did that make sense with the moving averages so far? How they kind of work like clocks and also magnets? The range will generally want to pull to those levels within those time iterations. So I'll look at the SPY daily in just a second and I can give you a more clear understanding of that. Okay, but before I tell you the answer on that, Anna, I actually want you to tell me what's going to be happening based on the moving averages. What do you think will be happening next on the SPY? So just look at the daily time frame and um, just tell me what you see. And I will be calling out in over voice when I am entering these puts. Again, we are looking for this 50 mile or this, excuse me, the 20 mile. It's currently at 736.50. So that is when we will be entering the puts. And again, the puts that I'm entering are the 734. I will tell you when I enter. Just be very, very patient for our range. The market's right at that 20 mile, so let it take. After we do open our puts, which again I'm not doing so just yet, I'm waiting for this level very, very specifically. Um, but after we open the puts, I'm gonna AFK like 2 minutes just to take a bite of something and drink some coffee, but then we'll go back into the long trend discussion. Be super patient for this level. Do not enter early or else you're very, very likely to see those puts get eaten up a little bit, okay? We want to be super, super patient for our level here. This put will be a 0 DT. So these will just be 0 DTs. Um, as bearish as today is, I really don't expect a lot of this bearishness to continue. Um, I expect today to more so be a very deep 5 mile test, testing both the upper bounds and the lower bounds of the 5 mile, and then us, seeing a lot of that upside. So I'm not entering puts yet. Do not chase this. You need to wait for the 20 mile to fully hit, okay? If that 20 mile level does not hit, then unfortunately we will not be taking the puts. So very, very patient. And we did discuss at the bottom of this cup or of this inverse cup how there was room for calls. I personally did not want to take them today because today there is quite a lot of bearishness within the market. Um, I try to usually not take positions that are going too far against what the market narrative is. Now that's not always the case. Sometimes there will be some very clear positions and we take those, but on a day like today, I really want to be more so in puts until we see the lower bounds of the 5 mile. Still waiting on our put entry, so do not take these early. We need to see this 20 mile tested before we take these puts. So I'll keep my phone open, but let me just go ahead. So I want to look at the daily time frame here just for a moment. So on our daily time frame, and unfortunately I won't be able to have like the square showing exactly what I'm talking about, so just kind of follow the cursor. But on our daily time frame for SPY, what are we seeing ever since, we were underneath that 200-day moving average, and then we started pulling up, right? We see the 5 mile crossing over the 10 mile. That's the first signal that, okay, market is potentially wanting to become bullish. We then see the 5 mile crossing over the 20 mile. This is telling us that within this range, the market's trying to be bullish. We see the 5 mile above the 10 mile. We see the 10 mile still underneath the 20 mile though. But with this large candle upward, with some of this large buying to the upside, which again, this is still a whole $60 away from where we are currently. So you have to use your signals here, right? We see the 5 mile above the 10 mile, 10 mile above the 20 mile, and then finally we see the 20 mile cross over the 200 mile. So now we have our short-term moving averages beating the long term, and now we just need to fully cross over the 50 mile. But by the point of the 200 or the 20-day moving average crossing over the 200-day moving average, what has happened with the 50 mile? We already see the 5 mile and the 10 mile heavily above that level, which that implies that not too many sessions later, we're going to be seeing that 50 mile being crossed by the 20 mile, which tells us that the market wants to buy. Okay, the market wants to be buying up in here. They do not want to be continuing back downward. We have the 5 mile above the 10 mile, 10 mile above the 20 mile, 20 mile above the 50 mile, 50 mile above the 200 mile. This is the perfect alignment. Okay, this is exactly what you want to see for heading upward. Okay, now we're still within that alignment. We're still seeing the market basically sitting right at this 10 mile, barely even testing this 10 mile at all. So just a lot of buying, a lot of buying, a lot of buying, tons of buying within each week, beating the 2 week average, beating the monthly average. Um, so there's a ton of buying up in here. Now, this kind of goes back to what I was talking about on Micron, which I do want to show in a second here, but I'm trying to keep tabs on the SPY price here. Um, because again, we do want to see that 5 minute 20 mile hit. Um, if not, then we're not going to chase those puts. Now, with that said, we see that we were pulling towards this upper Bollinger, but we've rejected it multiple times. That's very clear. We rejected it 4 times in here. That becomes somewhat of a bearish signal, okay? Because that's telling us that we don't want an overextension, okay? Because that's really what the Bollingers are there to catch, is either an underextension or an overextension of the price. Um, a perfect example will be on semiconductors here, where we see overextension right within the major buying because the price literally went from 307 all the way to 370 something within a couple sessions. So this is showing a little bit of that overextension. Then it pulls back to reality a little bit, but still we're buying here. This is just buying, 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 buying. The only downside here was to test the 10 mile, which even then it wasn't really happy with that level. It still wanted to continue buying. A little bit of overextension again, pull back from that. Um, but we don't see that so much within the SPY here. We see a little bit of overextension slightly during the beginning of this rally, but not very much. Um, with this range telling us that we don't want to extend further just yet, this can be turning bearish, but we still have a long way to go before things get very, very bearish. Okay. We still have the 5 mile that needs to pull under the 10 mile, 10 mile that needs to pull under the 20 mile. We need our short-term moving averages turning bearish before we can even really look at this as, you know, wanting to be a bearish market. Um, and I don't mean a bear market, I'm just saying a bearish short-term trend. Currently, this is telling us that we want to see buying still. Okay, this is still telling us that we want to see buying. Um, Potentially we see a 10 mod test in here. Potentially we can see even a 20 mod test starting to occur. But within how the moving averages and everything are currently positioned, this is telling us that the likelihood is very, very, very high that we see a 5 mod test into an upward bounce. Okay. Um, if we don't see that, then we look towards that 10 mod, which that's how we get our levels. Okay. This tells us our levels, literally to the T. So if we reject this 5 mile, what's our next level we're looking at? The 10 mile. Or I mean, excuse me, if we reject the 5 mile, we look for the 10 mile. 10 miles at the 727, which that tells us the exact price we need to start looking for if we reject this entire 5 mile range. Okay? So that's how you use the moving averages. But with the Bollingers, um, and I want to go to Micron here again, since we did talk about that quite a bit. We see how Micron is extending quite a bit above the upper Bollinger. This is telling us that even though there's a ton of buying being supported here, that buying is really kind of shooting for the moon. Okay, it's really pushing above even the expectation of the 5-day moving average. It's far above the expectation of the 10-day moving average and super far above the expectation of the 20-day moving average. So this is an overextension, and when we have overextensions, they need to cool down. Um, that's why we look for upper Bollinger moves to short into, because that is how you get your super quality short positions. You target overextensions, just like the undershoots or the underextensions, right? We see how on Micron it hit 311 in that lower Bollinger. From that lower Bollinger, it's just been nothing but buying ever since. So we go long in lower Bollinger moments, we go short during the upper Bollinger. Okay. Um, But you always want to catch the underextension or overextension. That's why I try not to focus too much about taking positions all over the place in here. You can do so, but you need to know your levels very, 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 very clearly. Excuse me. So I want to look at SPY. So SPY did fully reject. We missed our level, which I'm fully okay with, okay? I know some people might get mad about that, but whatever. I'd rather miss the level than it continue have been pushing up or something. Um, and us have a bad entry. So I would rather have a super good entry than have a bad entry to try to chase the price action. Now, we do have a very interesting thing here is that we've pushed down all the way to the lower bounds of the 5 mile, literally to the T, okay? This creates call buying opportunity. So unless we're going to continue rejecting downward here, this becomes a very, very opportune time for calls. And while I'm not exactly targeting 0 DTE calls here, um, I think I do want to target it some 0 DTE calls, but I also want to get some of the weekly calls as well. So the calls that I am targeting are the 736, and I'm going to go ahead and enter these literally right now. And we're just simply adding on to our other positions that we already had for the week. And some of these positions that I want some of these Soxus 9 puts again. So I'm gonna go ahead and open some of these. I'm still holding those Soxus calls, by the way, but you can choose to exit at this range if you want. Um, that's, you believing that we will be seeing upside from this range. Now, how do we know if there's going to be upside from this range or not? Hard to say because we have our VVIX insanely elevated. We see that it turned a small cup here, which means that it's very, very likely trying to aim higher. Let's take a look at our corporate credit. We see the HIG still pushing downward against this liquidity. However, potentially we can be seeing a little bit of an inverse head and shoulders here, which will tell us that we will be seeing some buying within the HIG later. So we have to be very cautious of that. Now I want to look at QQQ. Now QQQ has this huge gap, and we talked about this big chunk of liquidity. Not today, but we've been talking about it over the last few sessions. QQQ can attempt to clear that entire range. However, let's see where the 5 mile is on QQQ. 5 mile is right at this 703.75. We had a low of 703.13, so that's telling us roughly we could be seeing the 701.70 on QQQ before we fully finish this 5 mile test. Now, what about semiconductors? Semiconductors, the 5 mile is at 512.31. So technically we are fully testing the lower bounds of the 5 mile. Tested that very well actually. And we have fully broken below that liquidity range. Okay. which means that, sorry, I got a lot of drawings on here, that they want this liquidity right here. Very, very likely. But from that, that creates this massive inverse cup. We have that smaller head and shoulders that we talked about. We nailed that call entry on the success calls. Um, but I also want to show that we did enter some of those success puts here as well. Success 9Ps Friday entry. Okay. And I want to mark this in green. So that's what we're kind of looking at. I'm going to go ahead and delete this liquidity level because we do not need it anymore. I want to go back to SPY, see what's going on there. So again, we did take calls at the bottom here. Hold on, my Weeble crashed. It's been doing that all day. The success puts are for this Friday. And then I'm also in the 736.0 DT calls to the upside as well. Okay. Now those calls are up so far. There's going to be two different exits here. So again, we still have a lot of bearish structure on the day, but if this is going to be a call um, opportunity to where this was just a 5 mod test and we're heading to the upside, then we want to not just target the 20 mod, but the upper Bollinger on the 5-minute time frame. 20 mod is currently at the 736.02. Okay, now I have multiple contracts, so what I will be doing is exiting, and I'm literally just going to write this down because I think it's really important that we use notes more. Exit 80% of call positions at 20 mod. Let runners run. Okay, so that should be very clear. If you only have one call position, well, you can't exit 80% of that. You have to exit 100% of that. So if you only have the single call, you take your profit at the 20 mod. Kind of just no ifs, ands, or buts about that. That's what you have to do. These success puts I am going to be holding, because again, I do believe that this is going to be a 5 mod test into a bouncing market. I could be highly incorrect, so just make sure that you are still holding those success calls against those puts, and really just be hedged for both sides. And what being hedged means is basically having insurance for being wrong, you know? It's not like you drive your car to go out and get in a car wreck, the car wreck unfortunately will happen when you're not ready for it. So, kind of the same thing with hedging positions. So if we take calls to the upside, take a put against it, and it doesn't have to be 100% of the weight. It could be, half the contract cost, but any position to just have a small insurance to your position is going to be massive. Okay, because for example, say we have a rejection here and we don't even get to the 20 mod today. Well, all of those calls that we took are going to burn, and we're going to be heading downward quite a bit from there. Which means that those hedged puts, even though they might have been out of the money and everything at the time, would very, very likely fully pay out those calls. So that's the thinking of that. I know that's something I want to work with people more to start doing with their positions and everything. So now on the VVIX here, we are seeing a very slight pull down. Not super large, but we did go all the way from the 103.24 to the 102.87. So if we continue seeing downside within the VVIX, that will show and signify that we should be seeing our upside. Now, I just want to look at the 1 minute time frame here for a second because we are expecting bullish structure to be building at the bottom of this very large inverse cup. Um, so we should be seeing a bounce regardless. There's many different reasons for us to be bouncing here, from a structure and liquidity standpoint. Yeah, I'll take a look at Marathon. Did that make sense, everybody, when I was talking about the moving averages? I mean, to a point where if I showed you a symbol, would you be able to understand how to kind of navigate that, in terms of understanding whether it's bullish or bearish? We'll take Marathon here for example, and someone remind me, once we start getting up to this 736.80 range. Okay. Um, I have my phone open on the spy, but I'm gonna be talking here, and knowing that I talk a lot, I'm going to very likely miss it. So, um, anyway, Hig, we're still seeing a little bit of selling. Well, no, technically a little bit of buying in Hig, so potentially that could be that signal that we're heading up. Spy, do. Okay, and we'll just, yep, be super patient for the 20 mile range. Okay, Marathon. Mara, where are you? Used to be on my list. Okay, let's take a look at Marathon. So, is it a good entry right now? Well, you do have some super awesome structure here. Okay. Um, and what I mean is, let me pull up a rectangle. You have a huge chunk of liquidity being built here. Okay. And we know that the market wants to target that. Why? Because they've sat in that range for a very, very long time. Okay. This is liquidity waiting to be grabbed. Now, at the bottom of that liquidity waiting to be grabbed, what do we see? We see bullish structure. But does this make it a good time to enter a long position? No. Unfortunately, it doesn't because within we're above this 20 mile range currently. Um, and in fact, we just had a push into the upper Bollinger not too long ago. So this is telling us that there's room to cool down here. Okay. There's not only room to cool down here, but potentially we could even be forming smaller bearish structure. So your real exit or your real entry, again, was back at that lower Bollinger. Lower Bollingers are always when we find our entries. This was another entry right there. So if we can pull back to that lower Bollinger, then that would be a very quality entry to the upside because very likely that would give you the liquidity to push back up into this very large liquidity range and, obviously tons of upside from that. Well, hopefully that makes sense. Overall, the symbol's bullish, but there's still room to pull back, which makes it not the ideal time to enter. Now I want to look at SPY here. We have a little bit of a cup and handle forming, so I am expecting that 1 minute time frames 20 ma to reject and for us to continue back upward to the 20 ma on the 5 minute time frame. So it's okay if you miss the calls. Again, if you miss a position, it's totally okay. You know, it's better to miss a position than to enter just to enter. Um, and again, we always target very, very, very clear entries. Either we're entering at that upper Bollinger, which this trading session did not give us that entry yet. Um, or we're entering in the lower Bollinger. Okay. Now, if we do end up pushing back into the lower Bollinger here, um, I will go ahead and tack on more calls because again, even if you have positions that are really pushing against the day, and where was that one session? I want to show that Thursday. Like this, for example, where we had a call entry there that didn't fully take to the 20 mile. We had a call entry here, which did fully take, so that was a great call. But this shows that from that downside, from that underextension, we do expect, the push upward. We do expect that move to the upside, even if the extension, continues to extend. Um, so it's like, even if we pull back down and we see our calls getting pushed down further, well, if we continue pushing into this lower Bollinger, that's still telling us that that's an underextension, and it very, very likely will be filled to the upside. Okay, just like if we were doing that to the upside. Um, right in here, we see this overextension. From that overextension, a massive downside. So always try to ensure that your entries are within that upper Bollinger or lower Bollinger. Now, I want to take a look at the VVIX again. It is still pulling down, so it's at 102.70. So overall, that's a bullish signal for us if we do get the bounce that we are expecting. Yeah, we missed those earlier puts on the 20 watt, but it's totally okay. It's totally okay. There's so many different trades to take each and every day, that there's no reason to trap ourselves in a position, just because of FOMO. It's better to take really, really well-timed positions and just be super patient for those. Semiconductors seeing a little bit of a bounce from that lower Bollinger. Does look like it wants to close this inverse cup downward. So that would be pulling down to the 508.76. So potentially we might be getting another entry on these puts. Same with our SPY calls here. If we pull down again below the lower Bollinger here, we will be entering more calls. Because again, we will be targeting the 20 mile. And again, we are at the lower bounds of the 5 mile currently. So for me, this is a buying opportunity if we're going to be seeing our upside. Now, it's hard to say if we're going to be seeing our upside fully because again, the VVIX is still beyond elevated right now. And Pig is still pretty shaky. Okay, we need to see some sort of buying to the upside if we're going to be seeing, excuse me, our real upside bounce here. Now, it does look like we want to close this inverse cup to the 733.54. If we do that, I'm going to be adding more calls. Just waiting very patiently for our level. You see why it's okay if you miss those calls, Anna? You know, if the entry is going to be there, it will give you your entry. Um, there's no reason to chase because if you chase those calls, then you'd be down quite a bit right now. Compared to my calls are only down 12% right now. So, um, that's not a big deal in retrospect because we're expecting quite a bit of upside. Now again, if we do push down to the 733.54 range, basically that lower Bollinger, I will be tacking on more of the 736 calls. Reason why we're targeting the 736 is because that is above the 5 mile. So very, very likely, again, the moving averages kind of work like magnets. With us being below the 5 mile currently, that should be pulling us back up towards it. Okay. We've tested the upper bounds of the 5 mile. We've now tested the lower bounds of the 5 mile. We should now be heading back upwards slightly. Okay. Unless we're going to be full on just dumping, but I'm not seeing the signals of that yet. But that's something you'll see with my streams is you might see, oh, well, he missed an entry or something. I am very, very strict with my entries and exits. Um, because that's how I keep my consistency very, very high. Um, so hopefully that's something I can teach you all as we move forward. Being very strict with your rules, being very strict with your entries, being very strict where you exit. That's where you're going to make a lot of money in the end. Now, I am looking for this, again, I am looking for this inverse cup to close. However, it hasn't closed yet. But if it does, I will be adding some more calls there. So that's what I'm looking for. I am going to go mute just for a couple seconds, but I will be here in case something happens. So if we do get our call entry, I'll unmute and scream into the mic really quick to buy a call. Not scream, but you know what I mean. Anyway, if there's any questions, anybody, right now is a great time to ask. Um, while I will be muted for a moment. So. All right, I'm back. So be very, very patient for this entry here. But we should get it. We should be seeing the inverse cup close here. The downside should give us our very, very quality call entry here. So we're just waiting for that. Um, I'm just hovering over the price right now, waiting to buy basically. Then after that, we'll kind of go over the rest of the market. Give us our downside. You can do it. And are you still in the stream with me? Assume you are. Um, I'm gonna go over a couple symbols with you that I kind of want you to do your homework on and then come back to me with what you are seeing with the moving averages and everything. So I want to write something down. So what are some of the symbols that you really want to look at? Um, Specifically, I'd really like to focus on some of the positions that you're already holding in your portfolio. Now, again, we're being very, very patient for our call entry. It is coming, so get ready to buy. Okay, and I am in my calls. Okay. And again, those are the 736 calls. These are 0 DTEs. Hopefully we nailed that bounce. Okay, so let me gotta draw more down arrows. Right? I know it only usually happens when 6 calls, 0 DTE, D% exit at 5 minute time frame 20 mall. Okay. Also gonna post that on. Let me go say bye to my daughter really quick because she's got to go to school. And then I'll be right back. So just like 2 minutes, everybody, and then we'll go over kind of everything. But currently, we're taking or I'm taking the 736 calls to the upside. I see an upside bounce coming for multiple different reasons. Here, my daughter wants to say hi to you guys. Say hi. Okay, I'll be right back in just a minute. Okay, I'm back, everybody. Okay, so we're in our calls. We are waiting for our 20 ma, which is below the 736 range, but again, hold on, I want to clean this up a little bit because this is driving me nuts right now. I'm going to hide this big liquidity range because we're already very aware of it. Okay, that's not as bad anymore. Okay, so we have calls from the lower bounds of the 5 mile basically. We are looking for essentially the actual 5 mile itself to exit on. Um, but ideally we're still gonna exit 80% of positions at that 20 mile being at the 735.08. Let me check Lunar. Been a while since I've traded that one. So Lunar is currently a short position, okay? And the reason why is because you have this cup, and not only do you have that cup, which of course my Weeble decided to mess up, but you have upper Bollinger move there, upper Bollinger move there. Okay. What happens from the upper Bollinger? Usually downside. Okay. So even though we have the cup closed, what are we expecting here? Downside. And that downside you should be looking towards that 20 mile. Now, Lunar likes to sit on the 20 mile very often, so that's just a price that you can really gravitate towards. So if we're going to be having, this cup basically having a handle breakout to the upside, then you want to see the pull down to the 20 mile. So bullish overall, but it's still a short in the current sense. Now I want to look at semiconductors and everything. Okay, so that cup and handle did play out. Can delete that. I do want to start targeting potentially right here. Okay, so we will be watching for that. For SPY, it looks like we're seeing a little bit of a cup forming here. So we'll see if this gets rejected or not. But we should see that cup close, which would give us, that upside. Go ahead, delete that. Now let's look at our VVIX again. Let's look at our HIG. Let's kind of look at everything. VVIX has been pulling down pretty significantly. Again, it was all the way up at the 103.24. It's at the 102.50. So that is telling us that dealers are starting to, um, you know, move out of their insured positions. Now, can this absolutely start picking back up again if the sentiment changes? Of course. Um, but that is a signal we're looking for the call upside. Okay. Now again, QQQ's 5 mile is at the 103.59. So we talked about with QQQ how we could be heading all the way to the 107.70, if I remember that price correctly. So that would be the lower bounds of the 5 mile, almost to the T. So technically within QQQ we should be looking for that. However, we did get very close to the lower bounds. Um, I mean technically this is the lower bounds, but we've already tested that range, so to speak. So we're going to be looking for bullish structure at this point. We'll be looking for that in semiconductors and in SPY. SPY, this cup looks like it's breaking, but not entirely yet. We do have to head back down towards the 733.24 if we're going to invalidate this cup. So I'm just going to pull this off to the side here, but I'm not expecting that to happen. Um, Even if we do pull down further, I still expect bullish structure to start forming at the bottom here. BVIX at the 102.54. And let's check our credit. So HIG did pull down. It did invalidate this potential head and shoulders we had, or inverse head and shoulders. I can click it. And so we're still very deep within this dangerous liquidity range on HIG. Okay. Liquid. Why so hard to see liquid because they have these massive pre-market candles. Liquid isn't looking so bad, um, which is a good thing. It's a good thing for us. expecting any upside. So again, QQQ can give us that 10 or that 701.70 range to really fully test the lower bounds of the 5 mile. Semis pushing down further, which is actually giving us another entry into these Soxus 9Ps if anybody is interested. I'm actually going to take a couple more. Okay, so I think QQQ is hitting that level that we're looking for. Okay, it is. So QQQ hit that level. Now on the 5 minute time frame, it's not giving the additional call just yet, but that range is not too far away. So that might be basically when the major call entry is going to be, which will carry over to the SPY as well. You can see that lower Bollinger on the 5 minute time frame again still has some room towards it. Same with semiconductors here, so potentially another lower Bollinger move um, prior to our upside, but we are still targeting the upside from this range um, because we have completed multiple structures. And at the bottom of those structures, we really do anticipate bullish structure to create further downward liquidity. So that's what we're looking for. Lower Bollinger on QQQs at the 764. So that will be an entry. Then SPY, lower Bollinger's at the 732.57. So we're very close. And I'm, again, just going to be taking a couple of those 736 calls, adding to that position. Not too heavily, but again, we are still expecting some upside from this range. Can we continue selling off the entire day? Of course. But that's always something we have to consider. But that's not what I'm expecting for the overall day. So I am entering a few more of those calls. Well, waiting for that little bit of further push downward, but I am going to be entering some more of those calls. Just check QQQ. Yeah, our semiconductors still showing that we do have that room for that push down. So just be very patient on these calls. Same with QQQ here. We should push down to the lower Bollinger to get that super quality call entry. Just be very patient for it. It will resonate through literally all three of these. So, SPY, QQQ, semis, it will resonate through all three of them. So the entry will be, telling us is it's a very quality entry on basically all ends. So that is what we're waiting for. I don't think they're aiming for that 725 gap yet. Um, that would require basically like like a -2% type day, -3% type day. I'm not seeing that type of selling action occurring here. Yes, our VVIX is elevated. Yes, we have the HIG selling a little bit today, but not to the point where it's overly concerning me, I guess. Can it happen? Absolutely. Absolutely I could be wrong, but I still think that the market will be aiming to grab this 5 mall um as a retest. Especially because I mean, we're really not seeing massive selling out of everything. If we were going for a full market you know, sell off, we'd be seeing every single symbol almost selling off, which we're really not at that point. Um, and we'd also be seeing our HIG pulling down a lot further. We'd be seeing volatility picking up on the day quite a bit rather than, pulling down for a large majority of the session. Okay, so I'm waiting for those entries on the calls here. And again, you should still be holding those SOX calls that we got earlier, the ones that we got up here. Those are doing very well right now. Should see this smaller inverse cup close here. Liquid still buying upward. Pig still somewhat selling. Now with Bitcoin, this is still super misleading because this could still be turning into a cup to head to the upside. Even with the selling pressure we do see today, especially with it skirting on this lower Bollinger for quite a bit, that can create the conditions for the buy on the upside. Waiting very patiently for our lower Bollinger here. Should be hitting any second now. And I'm still targeting the 736 calls because again, that's kind of where our 5 mile range is. If the market's going to gravitate towards anything, it's going to gravitate towards that 5 mile. Okay, so our call entries is coming right here. So go ahead and take that. And actually, funny enough, remember how we took those Success um 10 calls last week? Well, they are actually almost basically at neutral again in terms of their price. They were down quite a bit, and now they're basically back up at full price again. So buying those hedges are definitely worth it. Okay, so we were in our calls again. We are targeting the 20 mile. And let's just take a look at everything while that's occurring. So obviously we have a spike upward in the VVIX, as we did have that push downward. QQQ is giving that entry. Let's check semis. And semiconductors did give the entry, and so far it is seeing a little bit of a bounce. Not too much yet, but again, we are down basically a whole $25 today on in terms of semiconductors. Um, semis are down a whole 6% currently almost. So we are expecting a bit of an upside reprieve, kind of just across the board, especially now that we've tested the upper bounds of these 5 mile ranges and the lower bounds of the 5 mile ranges. Now, NVIDIA, just want to look at some of the structure here. With NVIDIA, this is kind of interesting, but we did see a few days ago that we did close this cup. And from that cup closing, we were expecting downside within this handle. So it's kind of ironic that that's working out pretty much to a T. NVIDIA hasn't even invalidated its previous bullish structure or anything. So that's looking really nice. On the SPY hourly, we still have the same ordeal going on here. This cup has not been invalidated. Even though you have this, you know, massive bearish structure here, they have not invalidated our cup yet. So again, this is really kind of crediting towards our thesis that we should see the 5 mile taken again today. Semiconductors still sitting in the same boat. I do apologize for all the drawing, but we haven't invalidated this downside structure or this bullish structure yet. It might look very scary because we have this massive head and shoulders built, but technically the liquidity from that has already been taken. Um, we kind of need to build a new structure from here to continue pushing to the downside. So I'm not too worried about much further downside from this range. Okay. That's why I felt very good about taking those calls at the lower Bollinger there. Um, we should be seeing our upside bounce to the market, even if it's just towards the 5 mile. Now I want to look at HIG, I want to look at liquid, because those symbols should be giving us a little bit of that reprieve as well. HIG pulled down to the 79.70. It's only at 79.71, so that's not really telling us much yet. Liquid was at the 108.45. Currently at the 108.52, so a little bit of buying, but again, we want to see quite a bit further. And our VVIX is at the 102.97. It did pull all the way back up to the 103, looks like 103.16. Um, and pulling back down a little bit here. So if we can continue seeing our downside within the VVIX and everything, we should get our upside bounce. Again, this is kind of hard with a lower Bollinger extension, basically just continuing to extend, right? Very, very difficult, but we're still targeting our quality entries, okay? Even if we haven't gotten the move to the 20 mod today, this is still how you have to trade it. So we should be getting our upside bounce. Um, I'm not too worried about that right now. EVIX still slowly pulling downward. Mainly, I want to see the HIG pulling up. So if we can continue to see the HIG pulling up, that'll be kind of the confirmation that I need that we should be seeing some of that upside kicking in. Good morning, everybody. Let me go ahead and read chat now that I'm a little less unpolarized here. Okay, so let's see. 30-minute time frame filling the gap to the. I mean, you nailed it. Sanity, you nailed it. The 131.90. You got down to the 131.84. That's literally right there. What other stocks should I watch if I'm trading Nvidia? That's a great question. So, a lot of the semiconductors that I really like, and one of the ones that I really do want to be into a lot further is LRCX. Okay. Lam Research. I keep telling myself every time it gets to lower Bollinger that I'm gonna buy shares, and every time I don't, I kick myself in the butt because literally been saying this since like 50 something dollars that hey, you need to buy LRCX. Hey, you need to buy LRCX. Um, it's a fantastic company. Okay, very good company. If you're wanting to trade Nvidia, you do have to be aware that Google has essentially taken their market cap now. Um, overtaken Nvidia's market cap. I believe it did a few days ago. Um, we'll just double check that because I know Nvidia did have a pretty large pull upward. Where is Nvidia? Let's see, 6.4 trillion. Okay, so Nvidia did come back up over Google, but Google's been working very hard to overtake Nvidia on many different fronts. So Google's a super good one to be watching. There's AMAT, which is Applied Materials. It's another semiconductor company out of the UK or somewhere over in the EU. But this is probably one of the most important companies in the world, and it's just not super bought into because it is a foreign company rather than a United States company. If this was a US company, the market cap wouldn't be 300 bill, it'd be probably within the trillions. Um, Another one that I kick myself in the butt over is AMD because we were talking about buying this back at 120. Um, my drawings aren't showing anymore, but we were targeting buys back at the 120 range. Yeah, 140 right here. Um, and now all of a sudden it's 400. Another good one, even though it is super overextended right now, is Micron. We were talking about buying Micron back at 70. Um, funny how that ended up turning into 700. Well, it was 800 at one point, but so a lot of those companies are really nice. TSM is kind of in that same boat with AMAT, where it's a foreign company. Now it still has a massive market cap. It still has a 2 trillion market cap, but this isn't a US company. If this was a US company, I mean, this would probably be the top company in the S&P right now, just because of how important They are. So if you can buy lower Bollinger moves on some of those companies, you're going to be doing very, 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 very well. Okay, SPY, 5 minute time frame. We're getting some buying here. That's good. Okay, I'm gonna delete this cup because it's making me mad. Um, we're getting some buying here and targeting the 20 mile on the 5 minute time frame. That has been pulling down, of course, throughout the session. So that 20 mile is currently at the 734.11. Again, we're gonna be exiting 80% of our calls there because that's what you do to have very, very consistent trades. And even if you entered some of these calls earlier, exiting at that 20 mile isn't going to become the worst loss in the world. Okay. So that's why we always do those 20 mile exits because either they become very strong wins or the loss isn't that bad. Now, I've been buying calls ever since we hit the lower bounds of the 5 mile, which was at that 733.80. So I've bought into calls 3 times today. So I'm still holding all three of those sets. And seeing how the lower bound or the lower Bollinger here is still below the 20 mile, that means that all of these calls that I've purchased, if we hit this 20 mile range, should become, either neutral or, pulling a profit. So that's why I always say continue buying into those lower Bollingers. Don't shake too much when the market gets scary because unfortunately the market is purely algorithmic traded. Um, this is how the algorithms like to trade. They like to target buys into the lower Bollinger, like to target sells into the upper Bollinger. So always just have to have the conviction that the technicals are going to work out and that your positions will do well because of that. Even if you might be down quite a bit, my calls right now are down 23%, you know. Is that a big deal? Yeah, absolutely. They were down even further than that at one point. But I don't trade to lose. I trade to win. I retain a very, very high consistency, and I try not to be egotistical about that, but I am very proud of that. Um, but I want to transfer that knowledge to you all too. Okay, so I intend to make money on my calls today. I'm not buying these calls to lose money. So, um, on that sentiment, hopefully you can understand why I continue to buy into lower Bollingers and things like that. Yeah, I know you told me about that. I We were talking about buying Palantir at 70 something too, and it makes me so mad. The one that really kills me, and if Mr. Spade was in chat right now, he would laugh about this, but Soxel, I had like 7,000 shares. I had 7,000 shares when it was back at like $8. I kick myself so hard over that one. Could you even imagine? That'd be at the very top of that, that would have been over $1 million. So mistakes do happen, but we learn as we trade, and there's always opportunities that come up. So don't worry about it. It's just kind of that feeling where it's like that gross taste in your mouth feeling, you know? Our VVIX is pulling back to the 102.48. So our bounce so far is looking very good. My calls are now only down 12%. So a lot of that weight is returning very, very nicely. Again, like I said, I fully plan to make money on these calls. I don't buy positions to lose money unless it's a hedge. I don't blame anyone who sold Bitcoin earlier. Um, it was so hard to know whether Bitcoin would be, some massive project or not. It was pure luck that was, and you know, many people think that Bitcoin was made by the CIA and stuff and pushed by the CIA. I have no clue about that, but I do know that it's pretty much like 99% institutionally owned now, which means that it went from being some little meme coin into something real. Um, Unlike any other real currency or crypto out there. I know Ethereum's trying to do that, but I dislike the Ethereum ecosystem quite a bit. Um, I really don't think there's a huge future in Ethereum. I think that's a lot of hype. Liquid buying up, Ig buying up, DVIX pulling down. All signals we want to see here for our upside bounce. Our 20 mile here is at the 734.03 again, and I'm really shaking this so that everybody pays attention. Exit 80% of those calls at the 20 mile. Okay, don't be stupid. Don't FOMO. Um, Use that 20 mile as an exit. Let's ensure we end these calls with green because I can guarantee you once my calls get up there, um, they'll be in the positive. Or at the very least neutral, which you know what, sometimes taking a neutral cut on a position is better than losing money. Okay? Um, because everything's about potentials here. Our potential is we bought these lower Bollinger moves so that we can reclaim this 5 mile and head up. Okay. Um, but the market doesn't always work towards how we want. Sometimes those potentials don't work out. So that's why we use the 20 mile. We exit 80% there, and we use the 20% that isn't exited to run if it's gonna run. That way we at least secured majority of the position, whether it became a profit for us or a very slight loss, big deal. As long as it's not a big loss, then that's the whole point. We then use those runners to really make us our major money. Okay. Um, I know a lot of FOMO traders will tell you not to do that. They'll tell you to kind of just buy the calls and hold them all the way. Don't do that. Um, Again, my consistency is extremely high because I do target that 20 mile. If you try to be a cowboy or cowgirl and overshoot that range, you will lose. Okay. I remember mining it a little bit back in the day. There was also that website, I forgot the name of it. It was like the Bitcoin tap where you could literally go get free Bitcoin from it. That was really cool for a while. Made a few $100 off that during college, so I didn't mind that at all. So everybody's calls here should at least be starting to do well. Okay. Starting to pick weight back up again. No more super doom and gloom on those calls, right? The exit, again, last time I'm going to say this, but 80% of those calls need to be taken at that 20 mile. Okay. Really use that to take profits. Okay. If we're going to break over that 20 mile range, then what is that signaling here? That means that we're going to break above this very dangerous liquidity range that we've been talking about. Which, if we do that, that'll pull us upward towards the 5 mile on the day. Five mile is currently at the 735.18. Has pulled down a little bit. It was at the 735.80, but with this price action pulling down on the day, it does pull down the level as well. My calls are only down 12% currently, so by the time we hit that 20 mile range, they should basically be back to neutral. Yeah, down -8%. Oh my gosh, I can't even believe that. I had a really early super strong trade like that too. Um I'll talk about it after we get our exit here because again, even me, I'm going to be exiting, at least 80% of the calls at that level. Um Currently I have 40 of the 736 calls going, so I'll be exiting off my head with like what, 32, something like that. Um Keeping the 8 to run, those 8 runners, if there's profit to be made on the day, they're gonna absolutely pay immensely. So I'm not too concerned about that. Just be super patient for our 20 mile here. We haven't hit it all day long, so that is the level we are going to gravitate towards. So I don't even remember a trading session where we haven't had the 5 minute 20 mile hit. So very likely we see a hit this time, especially when we are at the lower bounds of the 5 mile. Um, Everything's telling us that we should be heading upward to retest the actual 5 mile level itself. Okay, maybe I need to draw a couple more arrows to make that price move. Usually how it works. Yeah, I had a really big win in symbol called Cosmos. Cosm. Um, they were doing a reverse split, and the share price was before the split was 34 cents, something like that. And they did the reverse split, but the share price didn't change. There was a bug in the share price, so we were able to buy the split shares for literally 37 cents. Um, so a few of us in chat, Sparkito, myself, I think maybe Sadis did as well, but another friend of mine that isn't in the chat, um, we absolutely loaded on those. For me, I turned like 700 bucks into like $18,000 in the same day. Because those ran from that that 37 cents all the way to like $23 a share within that single session. So it was absurd. Absurd. And I can show you that really quick. That was back in 2022. It was during earnings right there, I want to say. No, because I swear it was in August that that happened. I want to say it was during. It's hard to say because there's so many reverse splits in this stock. like really, really go back sometimes. It was a single day's candle that just absolutely rocketed. It's right there. Anyway, this was my big play. Um, that really kind of kickstarted my major trading career. Is that I was able to buy those shares at 37 cents a piece, and they went to I sold mine at $21 a share. But they did go to like $23 that day. Let's get back to the SPY. Still looking for our exit here. Now, there is potentially this smaller head and shoulders forming. I'm not really giving that too much weight just yet because I do see that there is this cup forming, and this cup would take us to the 20 mile range. So I am looking for that cup to form. And let's just check the VVIX and everything. VVIX still pulling downward. Okay, so this is a very, very good signal for us. Even though it's still just unbelievably elevated today, it continuing to pull downward is very, very positive. The HIG has been buying. It might just seem like only 10 cents, but that is a lot of money. Okay, that's a lot of money in those 10 cents. And dealers only buy HIG if there's upside coming. Um, So that's looking good. Okay. Our upside here is looking very positive. Just a very slow day. Yeah, that's insane. But sometimes with the market that happens, and that's so cool when that does happen. It's such a great win for people. But the thing about that is that, well, I guess the sad kind of duality about that is that a lot of people who get those really big early wins are usually going to lose a lot of it because they don't know how to trade. Um, it's kind of like when had that huge win in Cosmo. I had no clue what to even do with it. I mean, I was just trying to buy random stocks that I thought were good, buy random options. I lost thousands and thousands and thousands before I got to the point where I knew how to trade. So we're just waiting for our price action here. It's just going very slow today. And mind you, the bulls are going to be very hesitant right now. Let me tell you. When we have semiconductors down, I think it was like what, -6% at one point? Yeah, they were down almost -6% at one point. Um, Still down almost that much. QQQ and semis, we do want to see a bounce here, okay? We do need the weight from all of these to really take those SPY calls upward. So we are looking for semiconductors to head up and for some of these other signals to continue pulling through. VVIX is at the 101.92 or 99, excuse me. So this is pulling down to a new low of the day. So that's very, very good. So what we do want to see, but we want to see a major bounce out of semis and we want to see a major bounce out of QQQ. Um, let's check our HIG again. Pig's still looking good. Um, remember we talked about this earlier, which why that got deleted. I know I drew it, but we have this inverse head and shoulders building, and it's actually building support above this very dangerous liquidity range again. So that could be very, very good. SPY, we're still looking at this potential head and shoulders, but I'm still looking at that as a cup because again, at the top of a cup, we expect to see bearish structure. It's hard to say if this was a cup top because this could be multiple different cups. I mean, this could be this smaller cup right here, or this could be trying to aim for a much larger cup. Okay. But with our VVIX pulling down pretty heavily, with our HIG continuing to buy upward, we are seeing some good signals of, the potential bounce. Now, QQQ did form a smaller inverse cup here, so again, further bearish structure there, unfortunately. But that can still turn into, okay, my Weeble crashed. 1 second, everybody. Weeble's just been crashing a lot today. Okay, so SPY, I was looking at what? Semis, is that, so this can create a double bottom. We just have to watch it very closely. SPY, I'm looking for a bounce here. Um, we just again have to be very cautious of this potential right shoulder building outward. So we're just watching for that. Watching our VVIX is still at 102. Let's check semis. Semis, we really want to see a bounce. They're down a whole $32 today. Um, Absolutely absurd. Volatility is slight uptick. Pig's still staying at that same level, and liquid pulling down a little bit. Nvidia somewhat building some bullish structure here, but we need to see QQQ buying upward. We need to see some actual buying within our primary stuff. Yeah, buying calls at the high today would have been an absolute nightmare. Um, but that's why we always target our lower Bollingers. Um, Even if we're having a little bit of struggles with it today, um, we still always target our buys into that lower Bollinger. Semi still pulling down very, very hard. Seeing a little bit of selling as well. Same with QQQ, pushing new lows of the day, which really isn't good. Those stock says calls are doing really, really well for us right now, though. VIX pulling back upwards since hitting that 109, or excuse me, the 101.86. Okay, market, are you just gonna go into full sell-off mode today? Is that what we're gonna do? Let me just go look through everything really quick. Because what I'm seeing here is many of our symbols are showing us this exact same pattern. And this is a AM or AMAT here. But we've already closed the head and shoulders. Okay, and almost every single one of our symbols are showing this. We've closed that liquidity. Arm still has a way down to go. Let's check Micron. Where are you? There you are. And on Micron here, we've closed a lot of that liquidity already. Now, I say closed because what I'm looking at here, I'm looking at this tapering off the upper Bollinger, because this really is what sets that inverse cup there. Now, can it pull down all the way, crashing through this liquidity range? Absolutely. Now, with Micron, it did have a low of 716 today, currently at 727. So we are seeing a little bit of a reprieve there. But I want to see a reprieve throughout the entire market. Um, this selling is getting absurd. Potentially, we can be seeing this upside with this, as I was talking about earlier, that smaller cup here. Technically, it hasn't been invalidated, so we can continue upward. It's just sketchy as heck, let me tell you. Today's one of those days where I still trade by my technicals, but it's not easy. It's not an easy day. It's not easy being down in your calls. Um, barely getting to that 20 mile, not even touching it, and then rejecting again. The worst feeling in the world. We've had that happen twice today. We did not buy this first call entry, thankfully though. Um, I suggested against that, and I am very, very thankful that I did. Okay, I hope everyone took that to heart, not to buy calls there. But I have been buying calls since this range. Okay, so if we don't see a massive bounce up to this 20 mil, things are gonna get really sketchy. Now, the 20 mil on the 5 minute time frame again has just been pulling down, 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 down. It's currently at the 733.50, so we're not even that far away from it. But with that said, what I'm looking for at this point isn't just the 20 mil. I want to see this cup close because if we can close this cup, this will invalidate this head and shoulders. Okay. We want to see this head and shoulders invalidated. If this head and shoulders is not invalidated and it pulls us down again, we're going to have to cut positions. So that's what we're looking for. The 20 MA is slightly below that. So the goal is we want to see this cup closed. Cup closes at 733.74. So that is our target. Now, if we have a rejection here, this is basically going to turn into that head and shoulders, that right shoulder. So we're really looking for this to continue pulling upward. Now, we did have a very large spike downward in the VVIX during this all, so that is going to help us. And what else? Pig still buying upward, so a lot of signals are telling us that we truly should be seeing a bounce here. Um, don't reject. What time did you sell that QQQ put? Because within the 5 minute time frame, um, and we did talk about this earlier today, how there was that super quality put entry on QQQ. I sold my 708 down here when we pushed into this lower Bollinger, so I was able to profit like massively from that put, which honestly thank God, because this without this put I would have been in some deep trouble today. Um, but that was a really quality put exit. Let's see SPY. We need to see this bouncing. Okay, we need to see this right shoulder basically become invalid. PVIX still pulling down, so it's looking good. It's just hard to say because today is a very difficult day. Easily a 10 out of 10 difficulty in terms of the difficulty overall. Not because of a selling day, but because of how they're selling around the 5 mile currently. They're really pushing the lower bounds very low. Um, which can be a bullish thing, but it's very hard to deal with. We're still seeing the VVIX pulling downward. Now, what else do I want to look at right now? Not pull downward. Let's check our semis. Trying to see if we're going to form a cup and handle. It's going to be kind of absurd if we see semis down a whole 6% today without any sort of reprieve. We just need to make sure this cup does not get invalidated. So, watching for that very closely. Same with this cup on QQQ. We want to make sure it doesn't get invalidated. We want to see further buying in the HIG, and we want to See the PVIX continuing downward. Did have a little spike upward, which is not ideal. Still looking for the bounce. PVIX having a pretty large uptick, so that's very scary against our call position. Um, Looking for a bounce throughout pretty much everything right now. Okay, we're gonna watch the SPY for a second. Um, I'm gonna be here, but I'm just gonna be muted for just a second, just because I need some coffee and I need to take my meds before I go nuts. Um, but we're still looking for that upward bounce. Okay. If we start invalidating this larger cup, we're gonna just cut the calls on the day and just wait for a really, really primed entry. So, okay, I'll be right back in just a couple minutes, everybody. But I'm right here. Yeah, if they close that 731.50, that's gonna be very, very bad news. Let's check the 4-hour time frame. So 4-hour time frame, technically we've already had that lower Bollinger pushed. Um, Not obviously super extended, but it was a tap, and a tap is sometimes all that's necessary. Um, but I absolutely do see what you're saying with that 4-hour. But we want to see some support built here. Um, Again, we are at the lower Bollinger, or not the lower Bollinger, but the 5 mile. Being at the 5 mile, we really should gravitate upwards towards that 5 mile range again. Um, which that's truly what I'm kind of looking for from here. So, okay, I need coffee. I need to take my meds. I'll be right back, everybody. I'm still holding my calls, whether I'm crazy or not. That's to be determined. So I'll be right back. Yeah, I mean, today's a very hard day, but I still don't think that today's going to be closing as red as it is. Um, I still think that a lot of this weight's going to be bought up. Um, Again, I could be wrong, but we do have some of the instruments telling us that the selling can be very large today. Okay, but we still have other instruments telling us that dealers are buying this level, which means that they expect upside. Anyway, I'll be right back like 3 minutes, but I'm here. I don't really have my headset on, so I don't know if you guys can hear me, but we did have an invalidation of this right shoulder, which that's super awesome for us because that's telling us that that Head and Shoulders can go goodbye, and now we're looking for this cup to the upside. So our calls are looking good, even though it's been beyond spooky. So okay, I'll be right back. No, the exit on the spy calls isn't going to be at the 20 mile here. Um, Unfortunately, the 20 miles pulled way too low. We're looking for basically the upper Bollinger, which I'm pretty sure coincides right with the 5 mile currently. 5 miles at 7:35:12. 5-minute upper Bollinger is at that 7:34:53. So that's what we're targeting. Okay, we're targeting that 5 mile range. And I'm going to delete that note. And the reason why I'm saying that is because we just invalidated that bearish structure. The invalidation of that bearish structure is telling us upside's coming. Okay. Um, our upside from here, we should be targeting support, which again, our closest support is at the 5 mile, is at that 535.11. Okay, so that's where we should be targeting our support. That's where we should see the price navigate or, basically gravitate towards. So, no, I'm not exiting at this 20 mil. That can be a mistake, but that's a mistake I'm willing to make today because I think that the upside is far greater. Okay, so we are targeting the 5 mile for an exit, um, which means that a large portion of the buying or of the selling today will be bought upward. Okay, so that means that we'd be seeing massive buying within semis, we'd be seeing massive buying within QQQ, we'd be seeing massive buying within the SPY. So be very aware of that. That's kind of the plan. Um, and we do want to see our VVIX continuing to pull downward. We want to see our HIG continuing to pull upward. It's starting to make that cup and handle slash that right shoulder on the inverse Head and Shoulders, which is telling us that if this is the case, then today was nothing but a dip. Okay. Um, but a very scary dip. Not an easy dip at all. Um, but that's what we're looking for. Oh no, I was muted for a minute, everybody. Sorry about that. Yeah, hopefully we have a better day tomorrow. Very tough day. Let me tell you, this is a very tough day. For those that do watch my streams, you know that today's is easily a 10 out of 10 tough day. Usually we do extremely, extremely well, and the market has been fighting us the entire session. Unfortunately. Those that were able to take some of those calls at the top, especially like those QQQ calls that I grabbed, heavily, heavily, heavily helped the day. However, I'm still fully expecting upside today, and I know that might seem crazy, but it's just extreme for them to continue pushing downward without trying to build any form of support, especially around the 5 mile range. Usually that'd be a range you'd want to gravitate towards. So even towards like the end of the day, I'm still fully expecting the market to gravitate towards that range. Um, just very difficult because they've been fighting our call entries, and on SPY they haven't even given us a put entry. We had to take our puts basically on semiconductors at the top there, um, and then QQQ. So it's been a very, very difficult day. I'm not gonna lie about that. Um, Currently my positions are down quite a bit. Okay. Not too happy about that. Um, but we still have to trade technicals. Doesn't matter how frustrated or anything we are, we can't revenge trade. Okay, because revenge trading, that's how you blow your account up. Okay. You have to continue trading technicals, which means that our lower Bollinger entries here are still, even though right now they're absolutely blown up to pieces, they were still the correct entries. Okay. Um, Especially like this one down here. This would have been a very well-paying entry going just to the 5 mile, which I don't want to do today, or to the 20 mile, excuse me, which I don't want to do today. But you all know why I'm targeting the 5 mile on the daily time frame rather than the 20 mile on the 5 minute time frame. I do think that the market will try to grab for that range. We've been seeing some slight buying out of HIG. We've been seeing our BVIX pulling downward still quite a bit today. I mean, it was all the way up at 103.24. It's currently at 101.99. So even though the market's been fighting us, I still kind of stand by all the entries that I've done, stand by all the trades that I do, um, even if they fight us. So, yep, I'm holding on to my calls for dear life, basically. Because truly the range should be that the dealers should want that 5 mile. Now I can flip the Gex really quick, so give me a second. We do have our Gex and Dex levels. So hold on, I'm gonna show that on stream really quick. Oh, I'm still holding on the big bear calls. Yes, yes. Now something I want to show you all. Hold on. And again, this is. Go ahead and keep them. Yeah, go ahead and keep them. So hold on, I want to bring up the heat map, and again, you can access this through the Discord. Okay. So, hold on, let me want to reset the transformation. You can also copy that URL as well, but feel free to join the Discord. Okay, so here's our Gex tool. Okay, and this is telling us basically where the call walls are, where the put walls are. So I want to go to the DEX. Okay, we see that within the dark red, that's basically today, we have a ton of puts. Now, there is a put wall at the 735, meaning that there is a large short position at that 735. Is it likely that we're going to break above that level today? Just based off of the GEX? Not entirely. Um, the GEX is actually very heavily leaning on the 732. Okay. We do have some calls, but the calls are very few and in between. We're not seeing a lot of calls taken at this 730 range just yet. We are starting to see a lot of calls at the basically 733 all the way to 738. But once we started pushing down a little bit further, um, you know, the bulls are starting to get a little hesitant on that. They don't want to buy two in the money. But the Bears have really been trying to take this level. Okay, they've been really tacking on between the 736 all the way to the 730. So there is a lot of downside weight right now on SPY. Let's check QQQ and semiconductors. Probably will show very much the same thing. Occurred. Let's try stocks right now. Okay, so we see on the DEX, which this is the delta. Okay, delta doesn't mean everything because delta can shift very dramatically, but there is a massive short position on the 500, uh, strike on semiconductors. And you can see that within the gamma as well, that there's just a massive put wall at that 500 range. It's a really good tool, um, because it kind of gives you a little bit more of what you can expect or not out of the price action. For example, right now we see that there's a ton of weight on those 732 puts. Um, but on the upside, that means that very likely we're going to try to burn that level. Okay. But there was also a very large put range at the 735. So what does that mean? That means very likely we're aiming to close in between the two of those. Okay. Which isn't ideal for us. Okay. It's not ideal, but this is still a very reasonable range to start heading towards. Okay. Just because the gamma is leaning one way doesn't mean that dealers want to drive it exactly to that price. Okay, you have to remember that because dealers, their goal is to provide liquidity, but to also make money. They want to sell positions that are going to burn. Okay, so for example, a lot of these 732, 731 puts should pretty much burn today. I mean, those are pretty much being sold to burn. Um, at least from what I'm currently seeing. Okay, hindsight can change that, but do have an invalidation of this cup, which was something we did not want. Okay. This is in semis, so at 500 put level really doing some work right now. With SPY, we're still doing good. We do have an invalidation of this smaller cup here, which that's fine because that was a handle regardless, but we can now be building this inverse head and shoulders, which would still form that handle on that cup. Okay, that would take us basically up to the 734. Days like today are very difficult, let me tell you. Let's check QQQ. Yep, QQQ completed that inverse cup to the downside, which for us, that's actually a good thing because from that completed cup, we should be expecting a handle. Now, one of kind of the dual natures of inverse cups is that the handles sometimes work, but most of the time they like to not work. Okay. Um, it's something that me and a few traders actually specifically look for is that we look for those inverse handles to basically break. Um, so we're gonna look for that here. Okay, we're looking for that here. Within SPY, we're looking for again more of that bounce. We are retesting that 20 mile range currently, so we're looking to not have a rejection off of that. Okay, we do want to see above the 20 mile. They literally have not given us that range the entire session. Okay, besides just barely right in there. Um, so that's what we're looking for. BVIX, let's check that. Still pulling downward, which is a very good signal. Okay, it's at 101.81. And let's check our HIG and everything. And our HIG's still doing very well. Still slowly buying upward. So that's a positive sign. But we do need to be seeing, obviously, buying in QQQ and SPY and everything. Very, very difficult day. But overall, we still played it the correct way. We still shorted the top of semiconductors that was given to us. We still exited or still entered that short as we expected to do. Um, that was perfect. Okay, you should still be holding onto that position because I actually think those are near in the money. Yeah, I mean those are doing very, very good now. Um, we also shorted the top of QQQ if I can find it. But we shorted the top of QQQ. Um, I took my profit right there. So was there still further profit down on the day to take? Absolutely. Um, but I got a lot of it. I got a good majority of that profit, and I'm very happy about that. It did help my day quite a bit. Um, Now if we could just have these calls not fight us so much, because let me tell you, this is brutal. Okay, this is absolutely brutal to see. It's very rare to see, but it is absolutely brutal to see. That there's only been essentially that single 20 mile exit today at the absolute low of the day. Um, Not ideal. Not ideal whatsoever. And very rare. I do need to make mention of that. That is a very rare movement. Um, BVIX still pulling down, so a lot of just mixed signals today. SPY can still be working on completing a up and handle here, slash inverse head and shoulders. The previous cup has not been invalidated, so it's still looking okay as disgusting as the rest of the market's looking right now. Our HIG is still holding strong. BVIX pulled up very slightly. I mean, the thing about semiconductors here, and I know it's a little hard to think about because usually most people call crashes being negative 20%, but our market caps are a lot larger than what they were back when we've had previous crashes. Um, Seeing over $36 downside in semiconductor ETF, which is, absolutely huge, by the way, is basically crash, you know. Um, Basically this is crashing prices. Okay. Now, SPY, not so much, but this is still a very, very large downside for SPY. We've seen much larger downsides within the day though, so it's not fair to call that a crash. Same with like QQQ. QQQ's down quite a bit, but we have seen this move down, 4 or 5% a day before. It's just very rare. I'm still not exiting calls yet, because again, as sketchy as this looks, I'm still seeing the upside. Okay. Maybe I'm just crazy, but profited a lot off my puts already for the day, and I'm still writing those semiconductor puts. So I'm very happy with that. But with these lower Bollinger entries, basically being rejected, it still tells me that very likely there's going to be a call upside today. Um, with how heavily puts are being tacked on as well, I think it's in dealers' interest to move it outside of that range as well. So we will be looking for that. What are your thoughts on stocks puts for tomorrow? Personally, I really like the Sox puts here, and they're gonna be for Friday by inception. So the thing about Sox and Soxel, um, the bull and bear ETF for this, is that the contracts by inception have the week duration. So any of these Soxus puts you're entering, which I think I want to enter a couple more here, honestly. But those puts should land, is what I'm trying to say. And again, the Soxus puts are basically like semiconductor calls. So, um, basically we're taking semiconductor calls at the bottom here. Well, what we're hopefully seeing as the bottom anyway. Sorry, just 1 second, everybody. I'm trying to read some text and everything. Okay, so I added more of those socks as puts. Again, that's taking calls into semiconductors. For semiconductors, today is basically a crash. No, it's not the negative 20% crash, but in terms of the actual ETF, this is massive, massive, massive weight taken out of the symbol today. So we're gonna try to buy that up, okay? Um, with our high yield corporate credit still holding strong, yes, it sold a little bit today. With our high yield corporate grade credit, or with our institutional grade corporate credit, um, it's still been holding up too. Okay, so we're seeing a lot of signals of things want to hold. It's a little hard when we're seeing such heavy selling. Um, for example, QQQ's down, hold $13 today. It's very hard to catch the bottom here, especially when we've been buying the technical correct bottoms and they haven't been working out. Um, it's very difficult. Okay. But our gamma levels and everything are still showing that we should be seeing that push upward. Micron share is good to buy now, so let me take a look. I'm gonna say very likely not, based on what I remember about the chart. No. Okay, and here's why. Um, Again, on the daily time frame, when you're so extended up into the upper Bollinger and everything, you really want to let things cool down. You want to let this 20 mile come. You want to let this upper Bollinger start pulling upward more. You wanna see a little bit of reprieve in the support before you really take those positions. Because if you take positions here, even though yes, we're having a major downside, um, the likelihood is you're going to be buying into positions that are going to continue sinking. So just have to be very, very patient, but the buying opportunity will open up. Hold on, I'm getting all sorts of phone calls because people are impatient. Okay, you're very welcome. And I do apologize. Well, hard for me to say it's my fault because technically we've still been entering from the technical aspect perfectly still. Um, but I do apologize for days like this where it's extremely hard and we do see positions not working in our favor. Um, I know that people look up to what I do as a more experienced and consistent trader. So I do feel bad when, even though technically for me, these are still perfect entries, they just have not given us our exit. Okay. And it's very rare, but it does happen, and there's very little I can do about it other than we need to study days like this. And, you know, perhaps when we're seeing corporate credit pulling down, when we're seeing the VVIX so elevated, um, maybe we just need to continue holding off on calls, because that's one concern that I did have moving into this morning when we had this first entry. I specifically did not take this entry because I said today is looking very, very, very bearish, and I really don't think that the upside from this range is going to do it. And, you know, unfortunately, I happen to be correct about that. We only got not even to the 20 mile and then full on rejection. So anyone who would have bought those calls there would have been absolutely cooked. And that's unfortunate. Now, in terms of cooked, these calls are still cooked right now. The calls that I entered there are still cooked. Calls down here are still cooked. And currently these calls are still cooked. Okay. Um, but they're still the correct technical entry. And with the upper Bollinger above us, we still have to target that. Okay. These entries have still been correct, but we've been having a very, very difficult selling day. Okay. So I apologize for that. I apologize not being able to, I guess, have that same conviction where I had here, where I said, I don't see the upside yet. From here, we were at the lower bounds of the 5 mile, which I've seen many times where we hit the lower bounds and then it's just off to the races. So that's what I originally thought when we headed down there. Then we started pushing even lower, and for me, that's telling me, okay, well, potentially we have two ranges now. Either we're going to start heading to the 10 mile, which literally all the way down there somewhere, or we're just simply going to grab the liquidity and reclaim this 5 mile. Um, Again, I'm still in that boat. I still think that that's what's going to occur, but we're in a very sketchy position. Okay, we're in a very, very, very sketchy position where this can head down all the way to that 10 mile range. And on the daily time frame, we're actually due for that 20 mile test. So potentially markets can continue selling off quite a bit here, even though we're expecting some form of reprieve. Um, they can absolutely deny us that. So if you're in calls, I need you to be aware of that there is a potential that these calls are going to get absolutely just cooked today. Okay. Um, Currently my calls are being absolutely blasted. Okay. Um, it's very hard to buy into these entries, but from a technical standpoint, these are still your entries, and as long as these are your entries, you have to follow your technicals and just try to manage your drawdown as best as you can. Um, because eventually one of these are going to pay out. Okay, one of these entries are going to pay out. There is room for calls today. Yeah, absolutely. I think the puts here for success are very, very, very ideal. And I even added some literally like 5 minutes ago. The 9 strike puts for this Friday. Um, Even though I just gave that spiel about potentially us having a major downside, continuing to happen, I still like the technicals here, and I still follow the technicals, and the technicals are telling us that we need to be adding some form of calls to the upside, which again for Sock says the 9 puts are calls to the upside. So that's still kind of the thesis that I have. It's very hard to catch knives here, but unfortunately, someone's got to do it, and I guess it's gonna be me. Yeah, just a very difficult day. This is one of the harder days I've traded in a very long time. Because so far they've only given us a single quality technical trade that's actually worked. And it wasn't even that much. Um, it would have been basically, excuse me, like $1.40 to the upside, which that's not a whole lot. BVIX continuing to pull down, just continuing to give us that mixed signal. Pig pulling down a little bit, but kind of expect that a little with this right inverse shoulder. We should be seeing a bounce out of that though. QQQ, we're seeing a little bit of a bounce so far, but not a whole lot yet. We need to see like multitudes of dollars upside at this point across a large majority of the market. Now, unfortunately, I'm not going to be able to stream the entire session, so I'm really trying not to cut out before we actually start getting our upside because I think that would be horrible. But I do have an appointment today and I do have to go pick my daughter up in an hour and 30 minutes. Um, which means I only have about another 30 minutes to stream before I have to fully get ready and everything. So I will apologize in advance if I do have to cut out on everyone before we actually see our upside. But we're still targeting it. So I guess now's a good time. Now that like I'm pretty much in my call positions for the day. I'm not gonna be adding much more because I don't wanna nuke my account, right? Um we know our target. We know what our upside is attempting to be here. Um so we should all have that same expectation. Excuse me. So if there's any questions that I can answer, I'll be happy to do so. Now just a reminder, I will not be streaming tomorrow. Wednesdays I will not be streaming, but I will be back on Thursday and Friday, so we will we will make up our losses for today, one way or another. Now, my losses are not the worst right now, just because I was able to take that QQQ put, and some of those success calls that we opened at the top of today have been absolutely kicking major butt. And it's been those cheap positions have completely saved this mess of a day. Okay, let me just say that. So that's why it's always important to try to be taking positions on both sides rather than just chasing, like, for example, just calls or just puts. Um, if you have a day like today where we're trying to now chase these calls, gosh, it's a hard day. I mean, what a difficult day. This has been a bloodbath in here. Um, they've been absolutely just killing the bulls today. Um, but they're now at the point of killing bears. Okay. Which is a good signal for us because that's telling us potentially we could start seeing some upside. But days like this are very difficult, you know. If you don't catch those early shorts when the market's going to absolutely start dumping, then you're just going to absolutely miss um, most of the price action of the day and then just get chopped up on those calls. I'm still holding my 0DT calls. Again, I still fully expect the 5 mile to be taken today. Um, Whether I'm crazy or not, that's to be determined, but fully expect that 5 mile to still be claimed towards the end of the day. Especially when we've been seeing our VVIX not defeated, obviously, it's far from defeated, it's still very elevated, but it's been pulling down very slowly. Okay, and we've also been seeing our HIG and liquid buying upward, um, even if only a little bit. So we're seeing slight signals of reprieve. Okay, even though they're not super good signals, um, slight signals of tapering is still a signal in its own. Okay, tapering means that okay, the selling is slowing down. The selling is slowing down. People are deciding to start hedging for the other direction. Eventually, that hedge will turn into where all the gamma is placed on the day, and then people will start pushing that direction. Um, Usually that's how that works, but selling usually is very quick. Um, Selling usually won't last the entire session. So look to this upside. I really do believe we will be seeing it. Um, Again, it's very hard catching knives, but sometimes we had to get our hands dirty and do what we need to do. Yes, I do use losses on options sometimes, but it's very, very level dependent. And more so, I've been setting conditional orders rather than stop losses. So the conditional orders you can set at least on Webull. That's my main trading brokerage. You can set the conditional orders so that if a certain price hits on the actual, whatever you're trading, it'll sell the contract at that point rather than you having to guess a limit order price or a stop loss, things like that. Um, Rather, I can focus entirely on my levels. So, for example, my calls right now, I'm gonna have to step away for like 30 minutes pretty soon here. Well, obviously, I won't be able to watch my calls, right? Well, what am I gonna do? Either I could put a stop loss right at that level, or I can put a conditional order where once it starts pushing up and then starts pulling down, it'll sell. Okay, and that's exactly what I want. Um, so that's probably what I'll be doing with that unless we get the push uh before I leave. But um I like conditional orders a lot. Okay, they're super awesome, and Webull does a very, very great job with providing a ton of different order options. No, I'm not sponsored by Webull or anything. I love the application. I think that they provide very, very quality charting. They provide very, very quality indicators. The brokerage side is very safe. It's backed by BlackRock and State Street. I mean, you never have to worry about Webull going under and not being able to pay you your money. So, um, I think it's an absolutely awesome broker. And it's not like Robinhood where they just give you the most basic charts that you can't even do technical analysis on or anything. I mean, this is entirely done through Webull. I've been doing this with my phone and everything for years, so I like it a lot. So these calls that I have on SPY right now are just 0 DTEs. I'll buy depending on where I see the movement going. So if I saw a real buying conviction today and I saw that, okay, we're going to be claiming that 5 mile and pushing above it, then I would say, sure, buy out for Friday. Um, yeah, exactly. If we could get like that double bottom type move into the move upward, then it'd be very worth trying to have a multiple day um contract. However, you never buy expensive spy calls into this price action. And this is something I'm literally saying as a rule, verbatim, never do it. Okay. You might make money sometimes, but do not trust this price action to be buying dated calls to the upside that are expensive. That's why we've been taking a lot of like those success puts because they're cheap. They have the Friday expire, the I can't talk. Friday expiry by inception, meaning that you're not really having to pay for that extra time. Whereas a spy contract, you can literally be paying hundreds of dollars just for those extra days, not to get that price action or anything else. And potentially here, with a 5 mile test, that can give the conditions to push to the 10 mile. Okay, and a gap down on a dated SPY contract is a multi-hundred-dollar mistake. Okay, and I don't want to suggest that to anybody right now. Not with this type of price action. It was a little different when we were trying to chase the upper Bollinger moves, and especially on that Thursday, where I did suggest people to buy dated SPY calls, to buy dated TQQQ, buy dated stocks as puts, all that good stuff, because there was a lot of upside from that range. We weren't selling due to anything crazy like today. It was more just like a fair value gap type of sell where it'd be bought up very easily. Now, today could be that as well, but let me tell you, it's a very difficult day. Um, we have our HIG, which yes, it's forming bullish structure and starting to buy upward, but it was pushing downward quite heavily. We saw our VVIX gap up, I mean, like what, a whole $2 or $3? But it's finally being pulled down and defeated a little bit. So I personally can't suggest to go take a dated spy call. Um, they're very expensive, especially if you're trying to target something in like this week. It's going to be just enormous. Um, I do think there's a lot of room in some of these smaller options, like TQQQ, for example. We've seen TQQQ drop almost $4 today. Well, those 75 calls are, let's just check them. Hold on. Those 75 calls for Friday are only 75 cents per. Well, $75 per. Um, if we get the move up, that's going to be like a $300, $400 contract. So the risk to reward is super high because if we have a gap down tomorrow, you spend, the $75 on that contract today, it might open $40 tomorrow. Well, $30 downside or $400 upside. I mean, risk reward, right? So that's how I try to think about just trading in general. Um, I never really want to just FOMO big calls just to make big money because that's how you lose big money too. Um, it's better to play it safe. Use some of these smaller contracts when we're having sketchy moments like this, and really let's move around those. I need to see UNH. I've been slowly buying into it. Oh wow, it's actually way above what my buy-in price is. Dang, hold up. That makes me happy. I started buying in this range. Okay, it was like 280 something. Yeah. So, my average right now, I have to check my long account, but it was like 320 something. So I like it. I like it a lot. I have been buying into healthcare for quite a while. Where is oh UVIX pulling down? There's a couple other healthcares I've been buying into, which has been Mark and CNC. Now, CNC, we started buying this. I don't remember the exact price. I want to say it was like 27, $29. So that's almost gone 100% on us. Mark, we started buying around 77 to $82 and it ran to 130 something. So, all right, everybody. I'm gonna only stream for just a couple more minutes. So if there's any final questions, now is the time to do it. But we are starting to see some reprieve within our markets, thank the Lord. It's terrible being a knife catcher and the knives just keep coming. So, um, starting to look good here. Starting to look like we're gonna get our upper support. It's looking very nice now. Um, so if there's any questions, now is a very, very good time. But other than that, thank you all for watching, and I do appreciate your patience, even though we've had a very, very difficult day. Um, no, I'm not green on the day. Uh, some of these calls are absolutely burning my hide right now, but it's okay. I still stand by the technical entries, and if we can get to that 735, then all of these calls are going to be paying out very well. So the day will be green if we can get that price action. And the market's looking like it's trying to build towards that. So hopefully I'm able to leave on a good note. With the market changing direction like we're expecting. BVIX continuing to pull down. So a lot of great signals. So hopefully we can see our upside here. I would really hate to hear that everybody gets burned on their calls today. I'd really like to be able to come back from my appointment and see everybody doing really well on their calls. So yes, I'll be streaming Thursday and Friday as well at that 9:15 a.m. start time. So no stream tomorrow, unfortunately, but I will be streaming Thursday and Friday. Tomorrow I might put out another video though. Again, I do put out a Sunday video every week. Um, on my actual just YouTube channel. Um, I know many don't watch that. Usually it's like a 20, 30 minute long video. Sometimes it's longer than that depending on how long I rant, but I go over the entire market. I go over earnings. I go over, different markets and what I'm seeing and what I'm expecting over the entire week. So if you ever want to just kind of have like a recap for the week, those videos are super good. Um, but yeah, other than that, thank you, Wonders. Yeah, that means a lot to me. It just makes me feel really bad because I know that I hate to say this, but like I remember what it was like to have a really small portfolio. Okay. And I remember what it was like to not know how to trade. And I remember what it was like to know what's like to follow people who think they know what they're talking about when they really don't, and then you lose a lot of money. I'm super against that, and I'm really trying to prevent that from occurring here, even a single session. So hopefully my heart is reaching you all here, but you know, um, the goal is still to remain consistent, to remain very structured, to not get emotional about our trades, and you know, ultimately to profit in the end. Um, some days we will have drawdowns. There's very little we can do about that if we don't catch the signals perfectly, but we're we, we're very much so doing very well overall in the streams. The consistency has been super, super, super strong. And even today, even though today's been an insanely hard day, I still think we can hit that 735. Um, which if we do, then a lot of those calls bought earlier are going to absolutely rocket in IV and everything. So yeah, okay, I'm gonna stop rambling. Um, I get emotional on days like this. But take care, everybody. I hope y'all have a great day or, continued rest of your day, depending on if you were able to buy some of those puts in the early market. Um, I am expecting our calls to take weight. Still holding all the dated calls this week, which has been insanely hard. I've been slowly adding to them on those dips, but overall, expecting the upside. Other than that, I hope everyone has a fantastic trading day and, just a good day in general. And I will see you all on Thursday morning, unless I put a video out tomorrow night. So take care, everybody. Thank you for watching. Great stream, even though it was 10 out of 10 difficult. Um, yeah, we do have the Discord. So hold on. I want to go ahead and just link this. And currently there is a $1 charge on it. Um, that will be going away very soon. Okay. Roughly about a month and a half tops. So if you want to join the chat, then there's that. But unfortunately, at least for the next 1 or 2 months, it's going to cost just the dollar. I did have that dollar charge on there because we do have unusual whales and some other tools that cost me hundreds of dollars a month. Um, but I'm going to eat those payments very soon here after I set some different things up. So, um, you want to help out with the $1 or $2 a month for 1 to 2 months? That'd be cool. But if not, no worries. Anyway, take care, everybody. Thanks for the stream. Thanks for the support. Love you all.